Existing home sales, which measures closings on existing homes, show that sales fell 1% in December to a 3.78 million unit annualized pace. Year-over-year sales are now down 6.2%. This report measures closings in December, which likely reflected people shopping in October and November when rates peaked at 8%. Since they've come down from there and we're starting to get past this normal winter slowdown in sales, we think that things will pick up from here. Homes remain on the market on average for 29 days, still showing that demand is strong for what's out there. First-time home buyers accounted for 29% of sales, down from 31% in the previous report. Cash buyers accounted for 29% of sales, up from 27%, while investors made up 16% of transactions, down from 18% in the last month's report. Now, as for mortgages and inflation, the Conference Board released their leading economic index, which is the forward-looking index that takes a broad look at the economy and is often a reliable recession indicator. For December, LEI fell 0.1%, which is the 21st month in a row of negative readings. This index is clearly still signaling a recession, despite most now thinking we will achieve a soft landing or avoid one altogether. They believe we will see a short recession beginning in Q2, which would be good for interest rates. The MBA released their mortgage application data for last week, showing that purchase applications rose 8% and are now down 18% year over year. Interest rates remained around 6.75, roughly 0.5% higher than this time last year. In the short term, we're going to need to see some very positive inflation data or weak economic data to make any meaningful improvements to interest rates. We're going to get the Fed's favorite measure of inflation, PCE, on Friday. If that number comes in lower than expected, we could see rates drop. In the meantime, inventory continues to stay tight. In the Chicagoland area, we have about 2.7 months of supply, and in a normal market, we want to see about double that number. Some neighborhoods like Arlington Heights and Schaumburg, for example, only have about 1.3 months supply. Demand is strong, which means prices will continue to stay strong, and being prepared to buy and sell will be more important than ever. This could be the new norm.